Taking a look at today's interest rate markets, let's look at the 10-year note futures as they're trading slightly lower here for a second session. Looking at 10-year note futures coming off of the recent highs a couple of days ago to trade lower for a couple of days here, but still really in the middle of the range here for the last couple of weeks and in the middle of the 113 handle once again today. When you look at today's price level, we're looking at 113.17, and that is the September future. Now, we are seeing rolling of positions as we move towards September expiration from September to December, so we're seeing very heavy action now moving into December futures as that rolling of positions continues to unfold. And looking at the driving factors today, a couple things influencing the markets. Now, some data points early in the session highlighted by consumer confidence, which came in a little bit stronger than anticipated. I think that's contributing to some of the selling pressure. Now, we did have some housing data that was pretty much in line with expectations, and manufacturing data, which actually came in a little soft. But overall, it does appear that the markets are digesting the recent data points, as well as the Fed speak that we had last week, highlighted by the Fed chairman in Jackson Hole on Friday. But we have several Fed speakers throughout this week, highlighted by two more tomorrow. And we had a bond auction today, or a treasury auction, the 2-year notes. And so those things, I think, are also having a bit of an influence in the market today. Now, later this week, we will get the PCE data, the Fed's preferred measure of inflation. That'll be on Friday. So that is another, I think, factor as the markets are anticipating that, and possibly why we're seeing the markets finding a range here throughout this week. Now, looking at the yield, the 10-year yield is higher by 2.5 basis points today to 384 basis points. And when you're looking at that yield curve, there is a shifting dynamic there. The inversion continues to narrow. It's down to 6 basis points today between the 2-year and the 10-year yield inversion, which is some of the narrowest of this year. We're getting close to those levels that we did see earlier in this month, which also correspond with the least inversion that the market has incurred since July of 2022. So a little bit over 2 years now, as it does appear as we move through this cycle that the yields, the back end of the yield curve will come out of that inversion as the Fed initiates the rate cuts later this year. So market kind of anticipating that, buying pressure on the front end of the curve, moving that yield on the 2-year lower, selling pressure on the back end of the curve today, moving that yield slightly higher, and therefore we're seeing the inversion continue to narrow once again today.